Hi, I'm Grant Stephen.
And I'm Chris Bernier.
And we're the two investment guys. This week, Chris and I want to take a step back from the markets and talk about some of the things you need to be thinking about at year end. But first, if we just have a quick look at markets near year end and the returns we're seeing there, we've got the Toronto Stock Exchange is up about 7% so far this year, where the S&P 500 in the States is up almost 25%, Chris. We look to Europe, we've got London up 10%, France is up 14%, Germany's up a pretty solid 21% there. And when we look to the Asian markets, we've got Tokyo up 50%, pretty unique circumstance there. And Hong Kong's up about 5%. So really pretty good year, Chris, overall, where we saw markets move more towards normal evaluation metrics, not bubble territory, but just sort of taking a move off the bottom, I guess you can call it. We thought it was important to talk about some things that investors need to be thinking about at year end.
Sure, well, absolutely. First and foremost, when such a good year in the markets, we want to talk a little bit about one of the things that you could be doing to offset some of the gains maybe, and that's tax loss selling. If you've got some accrued losses in your non-registered portfolio, you may want to consider selling some of those securities, crystallizing those losses to offset some of the capital gains that you may have incurred during the year. You want to be careful though, you don't want to, if you want to own those securities, you don't want to buy them back within 30 days, otherwise the superficial loss rule will kick in and you won't be able to claim that capital loss. Another thing that you could consider doing is donating securities to a charity.
Right, and so there, Chris, you just donate the whole value of the securities at the market, and any capital gain that sits there isn't taxed in your hands. So you're avoiding the tax bill on that and giving to your favorite charity. And something else to think about, and that's tax installments. If you've had a big year in a capital gain, it might move you into a tax installment scenario that you're not used to. So that's something to think about as well.
Absolutely. Those tax installments, by the way, are due by the 15th of December. Another thing to consider, if you're thinking of taking money out of your tax-free savings account maybe early in the new year, you might want to do that before the end of this calendar year. That allows you to recontribute that money back in the next calendar year. If you do it early in 2014, you're going to have to wait a full calendar year to recreate that contribution room.
Right. Real quick then, Chris, on RRSPs, the maximum amount for 2013 is $23,820. You've got till the 1st of March to do that. And equally important is on the RESP, you've got until December 31 to do something for 2013. Carry forward is a maximum of $5,000 a year if you're trying to catch up. And be very aware of if you've got a child turning 17, this is the last year in which it'll attract the grant money. So a couple of quick points there.
Absolutely. If you've got any questions or comments about any of the topics we discussed today, please contact Grant and I at twoinvestmentguys.com.
Join us next time. Chris and I are going to turn back to the markets and give a full year-end wrap at that. So until then, I'm Grant.
And I'm Chris.
And we're the two investment guys.